Good evening, everyone. Good evening. A big warm welcome to tonight's webinar, IC Markets. And the topic tonight is Forex landscape, possible paths forward. So let me just have a look at the attendees. Wow. We've got, I recognize several of the names, so thank you very much for joining me. And my name is Adam Harris. I'm one of the traders and analysts with Trade with Precision. So, sorry, I've been talking a lot today, so my voice is a bit rough. Big warm welcome. Thank you so much for joining me. And my name is Adam Harris. I'm one of the traders and analysts with Trade with Precision. So the agenda tonight is recent movements of the Forex markets. We're going to look at we're going to do a general market analysis across multiple timeframes. We're going to have a look at identifying potential trade opportunities that might be arising. And we're going to have a look at building a potential watch list for traders to consider. Thank you very much for joining me. Thank you very much, Saida, for just confirming that you can hear me. I was just going to ask all of you just to see everything looks good on my side. I just wanted to check if there was a sound is good and you can see and hear everything all right. So, well, let's just jump across to the platform. So I'm going to be using NT4, NT5 for the analysis today. Thank you so much, Leon. Thank you very much for confirming that. So let's just have a look at the general market analysis. So one of the instruments that I find particularly useful is the US dollar index, that is the DXY. So I think it's a very good idea for traders to have a look at the dollar index. So the reason for this is that the US dollar is the biggest component of the currency market. And we need to, at least amongst other things, we need to have a sense of where the US dollar is. So if we have a look at it on a daily basis, I just want to highlight this quickly. Give me a second to choose my color. So one of the things I want to highlight here is we've got a lower high. But if we look at the US dollar index, we can see that we've had a series of high highs, high lows. And actually, I would say that over the last few months, we've generally had a stronger US dollar. So the only reason I'm bringing this up is I'm watching what is going to happen this week with the US dollar, and I want to see how it performs against a basket of other currencies. If we, and I think this is relatively significant, I think that if we break this low here, if we start to head a little bit lower, I think the message that the markets are sending to us is that the dollar is starting to weaken. So for most of you, I can see there's quite a few, there's a lot of you that are new names for this evening. And one of the things I should say is that, it isn't always the case. So if you have started looking at trading, if you are new to the financial markets for the last let's just say for the last year, I think it's really important to emphasize that the dollar is, although it is a major component of the financial markets, it is not always the major driver in the market. So I think it's important to just kind of underscore that right now, although the dollar is very strong, if you started looking at the markets in the last year, you might get the impression that this is normal, that this is how the markets always operate, but it isn't. I have to say that over the last 10 years, the dollar has featured as a major sort of component or as a major mover of the markets probably only about 1 or 2 years out of that period. So I'm just trying to emphasize that although right now the dollar is very much a big cog in the system, it is not always a big cog in the system. And it's important to just kind of emphasize that. So we can see one of the things I want to just emphasize here is we've got a potential lower high. We've got a bit of a weakening of the US dollar. Now, if we then move across to the other major currencies. So what I'm going to do now is have a look at the, so the last time I did the webinar, I kind of mixed everything up. So I have to go, I have to go and find everything that I have here. Let's just have a look at this quickly. Give me a second. Okay, so one of the things I want to talk about is a little bit about how recently we can see a bit of the euro against the US dollar starting to strengthen. If we bring in the sterling, so let's bring in sterling, we can see here we've got a bit of a high low. The potential for a higher high is starting to sort of add to the mix. If we then add in, because I have to go find everything now, let's go have a look at Aussie dollar, US dollar. We can see here we've had a very sort of weak US dollar, Aussie dollar. So the reason I'm bringing this up is I need to talk a little bit about how the US dollar is currently featuring within the within the global markets. So it isn't always the case, but what we have currently is, I would say that if the US dollar is moving and it is very committed to what it is doing, we will see the impact of a strong or weak US dollar. We will see the impact of that moving not just currencies, but also commodities and also indices. So for those of you who haven't really kind of attended any of my previous webinars, this is going to be a bit of a new thing for you, but for those of you who have, you know exactly what I'm talking about. So if we bring across gold, just do this. I just want to highlight there's a big similarity, or at least there's a lot of correlation between what we're seeing with regards to gold and with regards to oil. Let's just bring up oil. Blah, 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 blah. What's going on? My watch list here just got, everything has just got turned upside down. Here we go. This is US oil. Let's have a look at that. Okay, so I'm bringing this up because one of the things that I'm watching for this week, and I think it is very important to kind of keep this in mind, is what is going to happen with the US dollar this week. So if we do end up getting a stronger US dollar this week, we'll finish predominantly to the upside. And if that happens, we will see a stronger, we will see the dollar start to weaken against a series of other instruments. And that will include the euro, the pound. So let's just go back to these here. Oh man, this is such a mess. Sorry, guys. So you can see here we've got a slightly higher low with the euro. We're starting to push it a little bit higher, and it becomes more significant if we start to breach this high here. So this is, this becomes important if the biggest sort of currency against the US dollar is the euro dollar. And the dollar basket, which is one of the items that I was just sort of kind of talking about here, is the dollar index, which is this one here. What I would like you guys to do is once a week, I would like you guys to have a look at the dollar index. Just generally, is the dollar index generally hitting lower, or is it hitting higher? Just as a general thing. I just want you to do that as a habit. Why? Well, because if the dollar is very committed to what it is doing, it is going to move everything out the way, and it's going to make a lot of sense. Everything else that you do is going to start to make a lot of sense. If that dollar is strong, we're going to see the euro head lower. We are going to see the indices head quite a bit lower. And we're going to see commodities head a bit lower. So this is one of the things that I learned through Nick McDonald, who founded Trade with Precision. And hi, Diana. Sorry, just want to say thank you very much for joining me. And so Nick, he was just kind of one of the traders that first drew my attention to the importance of the US dollar. if the US dollar is very strong, because you have to understand that there are periods when the US dollar has no idea what it really wants to do. But if it is strong or if it is weak, it is going to move everything else out the way. So the reason I bring this up is because if you look at a few of the other markets, you could see in general, you're going to be able to see that the markets have generally been heading lower. If we look at, say, the daily, for example, let's look at the Dow, bring it up. It's generally been hitting lower. So if we look at the weekly, for example, and let's just say we look at the NASDAQ. So generally speaking, if the dollar is very, very strong, we are going to see the euro head lower, the pound head lower, the dollar yen is going to head higher. We're going to see the NASDAQ, the Dow, and generally we're going to see stocks head lower, okay? Because the US stocks are going to be, they're going to be priced against the US dollar, right? So it doesn't, if you're based in the UK like me, if you're in London like me, you're going to be thinking, well, why would the US dollar be necessarily kind of like, why should I care about the US dollar? But you have to understand that at the end of World War II, 1945, the US dollar, the US economy possessed 95% of the world's wealth. And I didn't know this. I'm just saying that I had no idea that the US dollar and the US economy is the primary, at this point in our history on the planet, the US dollar is the primary kind of mover of kind of things around our planet, or in terms of the economy. And so if the US dollar is weak, or we see any kind of we see some sort of a negative impact on the US stocks, we are going to feel that impact across the world. This is important to understand. This is important. We need to, it isn't so much that we think that the US economy is so much integrated into the UK, but we have to understand that if the US economy is struggling, it is going to impact the rest of the world, because 90% of the world's transactions are done with the US dollar. So this is important with regards to the topic tonight. We're going to be looking at what is the state of the US dollar. Now, it isn't always the case. So that's why I was saying, if you started learning how to trade in the last year or two, you're thinking, what the hell's going on with regards to the dollar driving everything? But if you had looked at the 10 years prior to that, you would be of the impression actually that the dollar doesn't matter so much. So this is what I'm trying to say to you guys, is that currently when the dollar is under pressure and it is moving, whether it is weakening or strengthening, that is important to pay attention to when we are trading, whether we're trading currencies or not. But it isn't always the case. So if you look at the last, say, 10 years and you look at the different markets, the US dollar is not a factor. So I'm just trying to underscore how the US dollar is temporarily something we need to pay attention to. But it isn't always going to be something that is the case. And so one of the clues we need to pay, sort of one of the clues on that is, if we look at the dollar index, which you've got access to, we look at it on a daily basis, when there's no clear direction, then that's a situation where the dollar is not necessarily a factor. So what we want to do, and so for some of you, again, like Diana's a great example, you've all seen me looking at the markets. Then what we need to do is to have a look, and this is a very, very good exercise. I'm not just saying this for those of you who are day traders versus swing traders. Okay, so let's talk very quickly about what is the difference between day trading versus swing trading. Swing trading generally is when you're looking at the daily chart. You're generally looking at the higher time frames, you're looking at the 4-hour or the daily, and you're generally looking to trade in line with whatever the market, in the direction of whatever the market, whichever way the market is going. If you are a day trader, the market is, you are then looking at, say, the 15 minutes or the 1 hour. So what is the difference? Why does it matter? Why do we care? Well, if you ask fundamental analysts, what do they think? You know, one of the things they'll say about the noise on the lower time frames is they'll say that, look, the fundamental analysis, or the fundamental, let's call it the fundamental influences, will generally play out over a longer period of time, the weekly or monthly timeframes. And if you're a day trader, what you're focusing on really is just what is the daily time frame telling us. If you're a fundamental analyst, you understand that there is a noise on the lower time frames that you can disregard. So this is important, guys. Pay attention to what I'm about to say here. If you're a fundamental analyst, so if you're a value investor such as Warren Buffett, or you're looking at, say, Charlie Munger, or you've got some of the guys from the, I'm just thinking of the movie, which is The Big Short. Okay, so if you've got a series of those guys, they're focusing more on what are the fundamental aspects of the market. Are we in a bull market or a bear market? And they tend to disregard the noise on the lower time frame. So what they're referring to specifically is the daily time frame. So if the daily time frame is a bit noisy, it doesn't matter, because the bigger picture is generally bullish or generally bearish. Now, if you are a day trader, you are only focusing on what is happening in the daily time frame. This is important because you're not investing, you're only trading. I've said this several times to most of you. So if you're a day trader, what you're predominantly concerned with is what is today's trend. This is really important, guys. You are only concerned with what is today's trend, or what is the market. Is it bullish today? Is it bearish today? This is really important, because if you start to inject your opinion as to what you think the bigger picture is, the longer term time frame, the weekly or monthly time frame, you're going to start to battle with what is going on. Okay, so there's a great question that's just come through here. What do you expect for the dollar yen? You know, the Bank of Japan and all that stuff. This is I love that comment, because this is a very, very good, it's because it's relevant. It's relevant. Okay, so if we look at the dollar yen, we look at it from a daily perspective, we can see that it is generally trending up. So what are the things that we know? We know, this is a great example. I can actually use this in terms of what I'm talking about here. We know that the Bank of Japan, a couple of things. We know that their biggest export, their biggest, in terms of their biggest economic partner that they do business with, is the US. This is huge. I don't know what the stats are. I don't really know what they are, but I think it's something like 80% of the economy comes from business that they do with the US. Okay, so the problem for them with that is that it works in their favor to have a weaker yen. And one of the things I would like you to pay attention to, please, is that the dollar yen's behavior is not necessarily the same as the other currencies. So when you look at euro yen, you look at pound yen, or Kiwi yen, or Aussie yen, you're not necessarily going to get the same behavior. So let's just bring in Kiwi yen. You can see Kiwi yen is currently sort of range bound between this high and this low. And if we have a look at, say, pound yen, we can see the pound yen is largely sort of breaking the highs, but largely kind of, you can see there's just a very big difference between the structure of the pound yen, Kiwi yen, and the dollar yen. So I want you to understand that there is a difference between the Bank of Japan's relationship with the US and what it has with other currencies. They only care about their relationship with the US. So what I'm not saying here is, I'm not saying that the fundamentals are necessarily important with regards to trading. What I am saying is that the dollar yen definitely has a different behavior than any of the other currencies. So you might, for example, find that, you know, euro dollar is heading higher, pound dollar is heading higher, and what should be happening is dollar yen should be heading lower, but you look at it and it's heading higher. I want you to understand that Bank of Japan has its own completely independent relationship with the US dollar. Okay, so all I'm saying when I say that is that if you find that dollar yen is contradicting, the price action is contradicting what you think it it should be doing. So for example, let's say you think that you've got a weaker US dollar. So you think that dollar yen should be going down, and you can see euro dollars heading up, pound dollars heading up, Aussie dollars heading up, but dollar yen is heading up as well. And it doesn't make sense. I want you to understand that the Bank of Japan has a complete, and don't forget, these guys invented, Japanese candlesticks. They are creating, and they can trade whichever way they want. So just if there's one major currency pair that I want you to think of, that I want you to accept that it can do its own thing, is dollar yen. That's where I'm going with this whole thing. Okay, so let's have a look at euro dollar. So euro dollar, sorry, I messed this whole thing up. Okay, so euro dollar currently, one of the things that I want to talk about here is when we look at it from a monthly perspective, I am using here, this is sort of an auto support resistance tool, which is called fractal support resistance. You can find it, it is free. If you look here, it is available on indicatorspot.com. It is available to all of you. Leon, who's one of the attendees, he knows what I'm talking about. We have a couple of tools here that I think are very valuable and very worth your while. So I'm just bringing this to your attention. It is sort of like an automated support resistance tool, and it should be drawing these kind of levels in as you look through it. So when we look at kind of these levels here, we can see that the market is overextended. I do think that we are overdue for a retracement back up into these moving averages. This is a very, very long kind of move. We've had it over here before, but generally speaking, ladies and gentlemen, we tend to have a move and a pullback, a move and a pullback, a move and a pullback, and we're very much overdue for a retracement. And I'm kind of looking at this now because we've kind of, one of the levels we want to pay attention to is the euro against the US dollar, which is parity. So let's have a look at that, which is about here. So one of the things I want to have a look at is I want to see how price reacts against it. If we go down to the weekly basis, you can see here we've got a slightly higher low. The market is wanting to pull back, and starting, like currently the weekly candle is relatively bullish. As a trader, one of the sort of sweetest pieces of advice that I can give you. I'm going back now to sort of 2009, 2008. If you are seeing a contradiction between what you're seeing on the charts and what you are hearing in the news. So let's just say, for example, that you're hearing in the news that there's going to be, like, I'm going to tell you a personal story here. So in 2008, 2009, there was talk of China. There was going to be a trade war with China. There was talk of, I think it was Greece was going to default, or Spain was going to default. And so the expectation was that the euro would weaken. And at the time, from a technical analysis perspective, the euro was actually looking really strong. The dollar was looking quite weak, and the euro is looking relatively strong. And so what I learned from that process, which took me about a whole year to get to that point of, to accept the reality of the situation, which is the kind of lesson I want, one of the wisdoms that I want to pass on to you, is that if the price action on the charts is contradicting what you are hearing in the news and what you think the market should be doing, you need to trust the charts. This is really important. You must trust the charts. If the charts are bullish and you think they should be bearish based off the sentiment or the market that you're, the news that you're hearing, I promise you, you need to go with what the charts are saying. For whatever reason, and it's not just about investors or buyers or sellers or institutions, for whatever reason, the market, when we look at price action, that is always the reality of the situation. And there's always a bit of a lag between what we hear in the news and what we see in the charts. So we must always trust the charts. It's hard. It's a really hard thing to do. If the charts currently, look at this, the charts are currently bullish. So we're hearing, I don't want you to obsess too much about what the news is doing, but you can see here the current weekly candle is looking relatively bullish. And we can see we had a previous bearish candle here. We can see right now it's looking relatively bullish. So regardless of what you're hearing in the news, if you're hearing bearishness or bearish sentimentality, or you think that dollar is going to be unstoppable and it's really super strong. You need to be going with what you see in the charts. I'm trying to spare you the pain of genuinely, I'm trying to spare you the pain of trying to reconcile what you see on the charts versus what you think the charts should be doing. Don't worry about why the market's doing what it's doing, but just trust that if the market is bullish and you think it should be bearish, then it's bullish. If it's bearish and you think it should be bullish, it is bearish. So always go with what you see on the charts. This is like, there's one thing you take away from tonight's webinar. That is the most important thing. Okay, so that being said, we currently have a bit of a weekly retracement. You can see if we look at it from a monthly perspective, we are very much overextended away from the previous lows. We've had a big move down. You can see in the past, we've had a bit of a move back to the moving averages. And here you can see we're very overextended. So we could maybe possibly be in a situation where we are seeing a bit of a move back up to here. So the other thing with currencies that I want to mention here is that all I can do is relay to you. When I was learning how to trade, I was sitting in a class of 60 people and we would have coffee breaks. And I would remember talking to like, this is what I think is happening. This is what I'm hearing on Forex Factory or Forex Live. And everybody else would say the same kind of thing. So I have a frame of reference, which means that I would share a room with about 60 other people. And so I don't think that the experiences that I went through are completely unique. I think the experiences I went through are relatively universal. That's why I'm bringing this up. So one of the things I want to draw your attention to is that please keep in mind that when you're looking at a currency pair, you are not just looking at the euro. You're not just looking at the pound. You're not just looking at the Japanese yen. You are looking at the euro against other currencies, and you're looking at the pound against other currencies. So you might be looking at the markets and you think, okay, let's go and have a look at the pound. So let's go down here to the pound. So let's look at sterling. And so we're looking at it from a daily basis, and let's go down to the 4 hour. So we're looking at this and we're like, okay, it's in an uptrend. It's generally trending higher. And so our brain tends to tell us, well, the pound must be trending higher. But actually, there's something you need to take into account. Please, is that we have two parties here. We have the pound, the GBP against other currencies, the euro, the pound, the Aussie dollar, the Kiwi dollar. And this is something we need to understand. One thing that makes the currency markets different from stock markets or commodities is that, generally speaking, the commodities are priced against one other currency, the dollar, for example. But when we look at the currency markets, we are looking at the one currency, the GDP or the economy of one country, the supply and demand of one country against the supply and demand of another country. And that makes it, that's very different. That is not the same. So currencies are different from stocks and commodities and say cryptos in that one respect. Okay, so let's have a look. So it's worth your while as an exercise when you're looking at the daily chart of say GBP to look at this. It is worth your while to look at the other ones. So I tend to sort of reorder them like this. I kind of like, okay, we've got let's go and do this. So I've got kind of so the way I would do it, I'm not going to do the whole thing here, but I'm going to say, okay, let's say I had why is it giving me difficulties here? Okay, it's giving me some issues here. Fine, that's fine. I'll sort it out later. So what I'll do between this webinar and the next webinar I'll do is I'll reorder my kind of watch list. Most of you know that I have a watch list in a particular order, so it's fine, doesn't matter. So let's bring up euro dollar. So let's look at the two almost sort of side by side. If we look, this is sterling. We've got a slightly higher low. There's a lot of similarity between euro dollar and sterling. Let's go across to euro dollar. You can see here we've got a slightly higher low. We haven't really broken this high here. So what else do I want to draw your attention to? Let's go ahead and have a look at, we'll bring up Kiwi dollar and we will bring up Aussie dollar. Okay, so there we go. So we've got Aussie dollar, which is very weak at the moment because it's pushing lower. And how do we know this? Well, if we look at all the Aussie pairs, you'll see they tend to be pushing lower. So we'll have a look at those in a moment. We can see here, if we look at euro dollar, this is a slightly high low on the daily. The daily. So for most of you, you might be sitting here going, well, Adam, do I trade the daily? What do I do? What do I do? Should I be a swing trader? Should I be a day trader? The choice, ladies and gentlemen, is actually more to do with, probably more to do with where do you want to be? Where do you want to be 6 months from now or a year from now? You can do both. You have the choice. You're an adult. You can do whichever one you want. Day trading is generally looking at the 5 minutes or the 15 minutes and looking for very much shorter term moves. Swing trading is if we're looking pretty much at the 4 hourly and the daily. So we're looking at sort of slower moves, higher time frame stuff. We want to get a sense of what's going on there. So to make that kind of more real, if we look at the higher time frames here, we have a slightly high low. Generally we have a downtrend. Believe it or not, we have not got a change in trend here. We have a change in trend when we produce a higher low. So this is very important. Until we sort of, this level is very important. So this is really like the stuff I'm showing you now is more mentoring stuff. A downtrend means that we are supposed to be bearish until such time as the market has convinced us that it is not bearish anymore. So that means we talk about market structure. So that means that at any point the market can come all the way back up to here, and it's really only when it starts to breach this high that we can consider the fact, or we can concede that the market is not bullish anymore. So if we take that and we look at euro dollar, this is the most recent high, ladies and gentlemen. This is the most recent like major low. So if you look, we went from this high to this low. We then came up, produced a lower high, and this is where we are. So we've got price ping-ponging between a high, a lower high, and a lower low. So I know it sounds a bit confusing, but downtrend made up of a series of lower highs until we break this high. And by that, I mean a real substantive break above that. We are actually still bearish. This is really important. I want you to sort of pay attention to this. We are still actually generally in a downtrend. So if you want to ask me what's going on at the moment, we have a slightly high low. We only go into an uptrend when we produce a high low. Okay, so for now, this is still a major level. Price can come all the way up to here. It doesn't matter if it has produced a high low. If it rejects this, it can carry on down. Does that make sense, guys? When we're in a downtrend, lower highs are very important when we do that structural low. So it's only when we break those highs and produce a higher low that the story is changing. Does that make sense, guys? So but it's important because we can see we have a high low, and it is important that if we break that high, I think, especially if you look at these indicators. So here's something else I want you to remember. The most important stuff, and I love this because I know that listening tonight, I know that there are some very pessimistic, rational, evidence-based people. I know you're here tonight. But when you are trading the markets, you are not actually, when you're day trading, you're not trading the fundamentals. I want you to be convinced of this. You are not trading the fundamentals, ladies and gentlemen. You are trading just patterns. So it's kind of like the difference between summer and winter. You can have a summer's day where there's rain. You can have a winter's day when there's sun. You're not concerned with what the bigger picture is, whether it's winter or summer. You are only concerned with whether it is shining today, whether you have sun today, or whether it is raining today. Because that's all that matters as a trader, not as an investor, but as a trader. So as a trader, we have a higher low, which means that we have the potential here for a change in trend. We don't have it yet. We don't have it yet. But in terms of what we need to see, this is one of the criteria we need to see. We need to see a potential high low, and we're going to see a shift in that. Okay, so as a trader, and I'm going to tell you something now that is, you can't imagine the value. You won't even know the value of what I'm telling you now. But it is like you can pay a couple of grand to go attend a day trading course just to learn what I'm going to tell you now. It's not a brag. I'm just trying to illustrate what the important stuff is here. When you are a day trader, guys, ladies and gentlemen, you are only concerned with what the market is doing today or for the next few hours. Next week is a different problem. Next week is future Adam or future Diana or future Sammy or future kind of Cider or future Leon's problem. Okay, that's your future problem. So you need to understand that when you are a day trader, you are wearing a different hat than an investor. So when someone at dinner, when you're having dinner with friends and they say to you, what do you think about Tesla? You have two choices. You can talk about the longer term potential value, the value investing option, like Warren Buffett would say, of what you think the value of cryptocurrencies or currencies or Tesla is. Or you can talk about what is Tesla doing right now. Okay, because actually, the person you're talking to will not understand what you're talking about. So I've got some questions coming through. Diana's saying to me, how do we identify what is a change in the market? And even though it breaks, but it has potential reversal. Okay, so let's go and have a look at Tesla. Let's bring it up because I'm talking about this. So everything that I'm talking about today, even though the topic today is currencies and the Forex market, everything that I'm talking about to you is transferable. We are talking about how do we read what the short term versus the bigger picture is for the markets. So here's Tesla. So what is going on with Tesla from a 4-hour perspective? We have a downtrend, we've broken the high here. Well, we're sort of sitting in this area. If we look at it from a daily perspective, we're sitting at a major level of support. Do we know what the market, this is really important, by the way. So I'm now communicating directly with I want to say the folks who are attending tonight who want to trade the markets, but who are kind of very much attached to what the fundamentals are talking. So if you're talking about fundamentals, you're thinking about, holy shit, sorry, excuse my language, we're talking about recession, we're worried about inflation, we've got all these other things going on. Okay, so here's the thing. As a day trader, you're only concerned with what is happening over the next few hours. If it's going up, you're bullish. If it's going down, you're bearish. You are free. You're very liberated. You're liberated in terms of you will follow the market if it goes up. You are not expressing an opinion on what you think the market is worth. You're not saying, I think Tesla shares are terrible. You're not saying, I think Tesla is terrible. You're not saying, I think Microsoft is terrible. You're not saying, I think we're in for a recession. You're saying, I think for the next few days, the markets are going to head higher or they're going to head lower. This is really important, guys. So we have Tesla at a major level of support. It's moved down. It's a bit overextended. It's back in the moving averages. We have a 50, 20, and 10 in a bearish formation. We have a bearish candle forming. So what is the possibility here? I would say, given the existing kind of temperament and the existing trend, I would say, and the existing daily candle, I would say that there's a very high probability that if we break the low of this daily candle, this is Tuesday, if we break the low of this candle, we are likely to head down towards tomorrow. However, if we break the high, we're likely to head up to the upside. So you're thinking to me, well, what does this have to do with the currencies that we're having a look at? It's very, very important, because what I'm talking about today has more to do with what do we see on the chart. So Diana's asked me today, kind of like, she's saying to me, well, how do we identify what is the change or what is the trend in the market? So if you look at the euro dollar, which is the biggest currency that is traded against the US dollar, here we go. Here we go. what do we see? We have a higher low, but we don't have an uptrend. An uptrend is 4 things, like a Harry Potter lightning signal thing, like that Sky's got in his forehead. You need 4 things. You need a low, a high low, a high high. You need 4 things. If you have a downtrend, you need a high, a low, a lower high, and a low low. These are the 4 things you need. What we currently have is a high and a low, a lower high, and a higher low. We don't have anything. We've got a downtrend that's currently in place, and the downtrend only changes when we produce a higher low and a high high. That's when we have that confirmed change in trend. Up until we are at this level, we can still produce a downtrend. This is what I'm telling you now. Sounds really odd. You might not appreciate how important what I'm telling you, but our downtrend, which we have, is still intact until we break this high. And by that, I don't mean a little bit. I mean we have to see a real significant move in a high, low, high, high. So there are times when the market is in between whatever it's doing. It's either in a downtrend or an uptrend or somewhere in between. Okay. The reason I'm drawing your attention to this is because if we have a look, and I want you again to the habit, please, of just looking at the dollar index, which is the DXY, which is somewhere. Somewhere here, I've got the DXY, which is the dollar index. It's not a lot of data. There we go. I want you to just look at the dollar index once a week. Please do me a favor of looking at it on the weekend. On the weekend, is it trending? Is it looking bullish? Is it looking bearish? So what do we have now? We have a lower high. We still have an uptrend. Generally, the dollar is quite strong. So we have no clear picture. The next biggest chart that gives us the most amount of information is the euro dollar. The euro dollar is still on a downtrend until we break this high. Currently, it is looking bullish. So you're saying to me, well, what does this matter? Ladies and gentlemen, as a day trader, my question to you is this. Does the euro dollar, because remember, think about this. This is the most important. You need to be taking notes here. If you're a day trader, you are looking for all of your trades. I can't tell you the value of what I'm about to tell you here. All of your trades are generally on the 5 minutes or 15-minute time frame. You are looking, ladies and gentlemen, you're looking for 1 4-hour candle to provide you with your trading opportunities. So what does that mean? It means if we look at this on a 4-hour basis, we've got no real clear direction here. We don't have a clear direction here. We don't. We have a general trend to the upside. I would say that if I got a 4-hour candle that was looking really bullish here, what do you think the next candle is likely to do? What do you think the next candle is likely to do? If this is very bullish and we have a general uptrend, and here's the next major level, and prices, and we see the pound is heading higher, or we see the Kiwi dollar, Aussie dollar is heading higher, we see a bullish candle here. What do we think the next candle is more likely to do? Remember that trading is not guaranteed. Trading is what is most likely to happen. If we get a bullish candle here, the most likely next candle is most likely to be bullish. Am I wrong? I mean, as in, do you disagree with what I'm saying here? So we have an uptrend. We have price coming back to these levels. We have a major level up here. We've appeared to have broken through this. If we get a bullish candle here, is it crazy to think that the next candle is likely to be bullish? It's not guaranteed, but if we saw the next candle is likely to be bullish, given all the information I've just given you here, and so why is that important? Because it means that as a day trader, it means that my next series of trades are held within this candle. This is a separate kind of masterclass or price action masterclass. But remember that as a day trader, you're trading just the temporary intraday noise of what you see. So you might not think I'm talking about the topic tonight, but I actually am. I'm giving you not just what is the topic tonight, but how do we make money from it? How do we do that? So we can see there's a bit of an uptrend here. Let's go and have a look at, and so we've broken through this major level. The next major level is up here. So it is not crazy to think that if the dollar weakens and the euro dollar strengthens, we could see price head up to here, which means that over the next few days, we could find potential buying trade opportunities or trade setups in this area. Let's go look at a few others. Let's go look at Aussie dollar. So Aussie dollar has produced a high low, but it hasn't broken through here. My question to you is this. If Aussie dollar had to break through here and come back and test this, could there be a potential buy opportunity there? Just think about that for a second. Could that be the case? Okay, remember there's a level up here. So there's a potential. All the markets do, ladies and gentlemen, for day traders is they move from one level to the next level. That's all they do. If they break through this level, they're likely to head up here. That's all they do. So go look at the pound. So we've got uptrend here, higher lows, higher highs. Bit of a bullish candle here. See this bullish candle here? If we break the high of that with our stop loss below the low, if we break the high of that, do you think that we have a fair chance at coming up to this level? And then my next question to you is, if we break through this level, do you think we have a fair chance of coming up to there? This is how I want you to think. Ladies and gentlemen, investing is thinking longer term. Shorter term movements are all that traders are concerned with. We can change our opinion. If the market today looks bullish, but it looks bearish tomorrow, we will have different decision or different opportunities. So let's look at Kiwi dollar. So we've got a series of high lows. We've broken through this level of resistance. We've come back here. If we get a bullish candle here and we break the high of that, the market is likely signaling that it wants to head up here to this level. This is for tomorrow. So remember that for some of you, this is your first webinar with me and you're thinking this guy's crazy, there's no real value here, or I'm not really getting what I want out of this. But for those of you who follow me regularly, you know, there's Diana, there's Leon, there's several of you, you know exactly what I'm talking about here. Today's webinar, tonight's webinar, we are only looking at money-making opportunities until Friday. Next week, I've got another webinar and we'll look at what are the likely money-making opportunities next week. But for today, we are looking at potentials here. If we get a bullish candle here, a nice green candle in this area, and then the next candle breaks the high, the probabilities of us, especially if we break through this little area here, the probabilities of us moving up to this area become very, very high. Let's look at Aussie Kiwi. So we're doing, because we've got 10 minutes left, and I want to kind of talk about the different things. So this is Aussie dollar. So I would say that if we break below here, and the pound also breaks lower and the euro also breaks lower, what can we learn from that? We can say, well, that's definitely the dollar. If we see the euro breaking lower, the pound breaking lower, the Aussie dollar breaking lower, then that must surely be the dollar that's doing it if it's all happening at the same time. However, if we break above the high here, break up there, we are looking relatively strong. We probably have a very good chance of climbing to the high. Should we find that Kiwi dollar is also breaking above this high? Should we find that the pound is also breaking above this high, breaking above the 50-period moving average? Should we find that that happens on the same day on the same currency pairs? I think it's fair to assume that the dollar is probably weakening, and we're seeing the euro strengthen, the pound strengthen, the Aussie dollar strengthen. That being said, one of the things that I would like you all to do is to have a look at all the euro pairs. So you've got the daily chart up. Let's go through the euro pairs. We've got euro dollar. What's happening here? We've got a high low within a general downtrend. No change of trend, still within a downtrend. Let's go through these. Euro Aussie. Euro Aussie is trending up. Look at the last 10 to 20, 30, 40 candles. Look at this, uptrend, breaking through these highs. Look at Euro Kiwi. Euro Kiwi is definitely in an uptrend. It's got a bit of a level of resistance here. We can see this. but we've broken above these highs. So we're more bullish than bearish. What about Euro Swissy? Euro Swissy is trying to produce, it's in an uptrend. Higher lows, higher highs. Downtrend here, uptrend here. So it's bullish, it's not bearish. Euro CAD. Euro CAD is in an uptrend, broken the high today. So Euro CAD is pushing higher. Euro GBP. Euro GBP pushing up a little bit here. It's in a downtrend, low highs, low lows. That's fine. That's fine. We'll come back to that. What's going on with Euro Yen? Euro Yen is in an uptrend. Okay, and Euro Kiwi is kind of in a bit of a range here. So Euro Aussie, Euro Kiwi are roughly within a bit of a range here. So this is important because if I had to say to you, do you think based off the charts we've looked at here, do you get the sense that the euro is weak? Do you feel like it's falling through the floor? I do not get that sense. Don't worry. Listen, I've been around in this market. I've been trading this market for 2008, so a long time. Okay, call it 13, 14, 15 years. And what you hear in the news and what you expect the market to do isn't always what happens. When Spain was expected to default on a lot of its stuff, you know what happened? The euro and the cost of services in Spain got so cheap that Spain became attractive for services. So what happened? The economy started to strengthen because people were asking Spanish people and Portuguese people to start doing tasks for them because they're educated, they could speak English. And so all of a sudden the economy starts doing well, even though the currency is weak. So please understand that what you see in the charts and what the reality of stuff, there's always a lag. You can see the market, the economy starts to strengthen and the currency could be lagging. So don't associate the two. South Africa always used to weaken their currencies because they used to make a lot of money on exports. They intentionally weaken their currencies. So a weaker currency would make you think the economy wasn't doing well, but it was an export country. So they made money when they had a weaker currency. So I'm just trying to kind of like direct you here to not associating strength or weakness or a good economy or a weak economy with what is happening with the currencies. Okay, I want you to break that. I want you to disconnect what you're seeing. So here we can see. So we can see the euro is generally climbing. Let's look at the pound. So I'm going to bring all the pound pairs. So pound pairs are generally uptrending. We're breaking highs here on the daily. Pound CAD generally uptrending at the moment. Pound Swissy in an uptrend at the moment. Not a very big one, but certainly more than it's been for a while. Pound Aussie. Strong uptrend, breaking these highs. Remember, it's not just the pound, ladies and gentlemen. It is the Australian dollar as well. Let me have a look at your questions here. So what are your thoughts about the current pound yen? Don't see the screen synchronized. It's still Aussie dollar. It's okay now. I like your screen and learning a lot. Thank you, Diana. I love your comments and your feedback and your support. Thank you. Marzina just joined in. Will the recording be available? The recording is available. It is there. We are recording this, but sometimes if you don't get a follow-up email with saying, here's the recording, you need to email me. So this is the plan. Please email. Just bear with me. Email trade with precision. So email me if you want a copy of the recording, tonight's recording. Just send me an email just saying, can I get a copy of the recording? That's all. And I will send you the link for the download stuff because sometimes you don't get a follow-up email. Okay. Here we go. So my point here is, ladies and gentlemen, pound CAD climbing, pound Kiwi. Let's have a look at pound yen. You asked about that. Pound yen is generally climbing. Look at this. Bullish candle, very, very bullish candle on the weekly, pushing higher. And monthly, more bullish than bearish. Okay, this is a weird, this spike comes from the Kiwi. In case you're wondering, you guys wouldn't necessarily know this, but the New Zealand, the Royal Bank of New Zealand, is it RBNZ? they mess with the markets. I often see when they talk about rates, and this is over the last 10 years, they tend to create spikes. So these little kind of spikes you see all over the place, that's pretty standard for Kiwi pairs. Okay, you'll see it here on these different pairs here as well. You can see that spike, the spikes here that happens. So my point here is, are the pound pairs generally climbing? Generally, they are trending higher. If we look at the Aussie pairs, let's go through these because I realize we have a little bit of time left. Let's look at Aussie CAD. Aussie CAD is generally trending down, looking weak. Okay. Aussie Swissy, generally trending down, pulling up. Aussie Yen, generally bouncing off this level of support, coming back in here. It's range bound. It's range bound. Aussie Kiwi pushing lower, starting to break these lows. So what would I say from that? Well, I would say the Euro pairs are climbing higher, the GBP pairs are climbing higher, the Aussie pairs are trending lower. And that leaves us with a few pairs. So I want you to keep that in mind. If we look at these pairs, if we look at, say, Aussie pairs, Kiwi pairs, what's going on? Kiwi CAD is pushing up at the moment. On the daily, it's range bound. It was downtrending. It's a bit funny now. If you look at Kiwi Swissy, pushing up, it wants to change that trend. So we've got a higher low. We look at Kiwi Yen, it's double bottom, uptrend, higher high, higher low, higher high. It's more bullish. And Kiwi dollar, which is heading lower but trying to push higher. So what would I say about this? I would say, yeah, Kiwi against the dollar is weak, but most of the other Kiwi pairs are nice and bullish. They're pushing higher. So what does that mean? It means for day traders, you're looking for short-term opportunities to the upside. For swing traders who are looking at the daily markets, the markets have not changed their daily trends yet. They haven't. This is important. We haven't seen a change in trend yet. The Aussie pairs, Aussie CAD. Aussie CAD downtrend coming up. So this daily trend for the swing traders, there's nothing wrong with what you do. If you're a swing trader, if you only have time to place trades at 10 o'clock at night, if you only have time to do that, that's all you have time to do. You're in a downtrend. You're looking for price to come back into the moving averages to test resistance here, and you're looking for sells. So it's a bit of a patience game because you have to wait for that. You look at Aussie Swissy. Aussie Swissy is trending lower. Aussie Yen is a level of support similar to Aussie Kiwi. Aussie, sorry, I meant Kiwi Yen, and Aussie Yen has broken these lows here. So you've generally, I would say, the Aussie dollar is looking bearish compared to, say, the Euro pairs. Let's have a look at some of your comments here. I had a great trade on NASDAQ. I bet you did. I bet you did. Was that today? I'm betting you were probably short-term bullish. Here we go. That's where's my NASDAQ? 2000, Russell 2000, Dow 500. There we go. So what was the trend today? It's more bullish than bearish. Okay, there's a bit of a move up today, a bit of a pullback. It's trying to turn around. Okay, look at the daily bullish candle. Guys, if you are struggling at the moment with your trading, you're finding the market is changing its mood. It's bullish, then it's bearish. It's bullish, then it's bearish, then it's bearish. Don't be surprised. General trend is down, but it is trying to change to the upside. Thanks, Sandy. Great trade. I'm glad you did. How am I using the MACD and RSI in current analysis? Okay, so here's how it goes for all of you. Simpler is better. Okay, if my trend is up on price action, I want my MACD going up as well and my RSI going up. So they should be doing the same thing. So what I mean by that is I'm only worried with what happens here. So if you look at I need the indices. The Russell S&P 500. So we are producing high, low, lower high, lower low, what could be a lower high. Okay, we have a general downtrend and general downtrend here. Generally, it's high, low. So they are in agreement. Okay, that's the same thing. You're asking a very important question, basically, and I want to give you the best answer. But the answer is on any time frame, if I'm looking at the 5 minutes, 15 minutes, any of these, I want to see the indicators doing the same thing as price action. If price action is bearish, I want, meaning lower highs, lower lows, I want the indicators, both of them, lower highs, lower lows. This is really important. So Marzina is asking a fantastic question. If the indicators are doing higher lows, higher highs, in other words, the indicators are disagreeing with what price is doing, there's a problem. I should step away. Something is wrong. The reason is these indicators measure price over time. This is, sorry, they measure speed over time. So this is price over time, this is speed over time. If the market is slowed down, the implication is that the market is not really wanting to go the way it is. Okay, it's slowing down, it's losing momentum. That will show up in these indicators. So if the price is bullish and the indicators are bearish, there's a problem. It doesn't mean I should sell, it just means maybe I shouldn't buy. If price is bearish and the indicators are trending higher, then I should possibly not be selling. That's a crucial thing, and we talk about that in other other webinars. So for those of you who this is your first webinar, please join me. We do 1 or 2 webinars a week. I want you to, all these things that we cover that I'm talking about now, any questions you have, just bring them. I will talk about them in the webinars. And one of those examples being bullish versus bearish price action and the indicators. I'll talk about that in the next webinar because I'm just conscious of the time. We're running over by a few minutes. Nicholas is asking me, along with a basket of currencies, to examine what are their recommended times to trade. That is a beautiful question. Okay, so here's the thing. I'm in the UK. I find that, let's do this. So let's go here. Let's look at Forex. Here we go. Here we go. So you're asking all the right questions. You'll see here we've got a, why is it not giving me, here we go. Here we go. So yes, I think that these periods, when I get to my desk at 6 a.m., I'm in the UK, I find that I get lots of market movements during this period. And then I find I get a lot of market movements during this period. Generally, if the market's going to trend, it'll do it anyway. But I find that during this period, from 6 a.m. UK time to say 10 a.m., and then again from say 1 p.m. until about 3 p.m., I find all these, during this period, I get really big moves in the markets. And so I tend to, as a day trader, I tend to focus on those periods, but also looking at the general thing. Like sometimes the market will just keep trending throughout the day. But if you're asking me on just a general approach to the markets, that's what I do. Next question. Short today. Thank you, Diana. I appreciate that. And that's the right approach. What about the targets of IC markets? So you've just said here, trading central. No, I get you. You're asking me about trading central. I want you guys to focus more on what the markets are doing. Don't think too much. Don't think like it's a weird thing to say, but don't overthink it. Start to look at what is happening on the 4-hour and the hourly. The 4 hours are a really good indication of what the market is doing. So we have an uptrend here, okay? High lows, high highs. But we're currently in a move down, but it's also likely to, because we're in an uptrend, it's likely to turn around in this area. So I want you to both keep an awareness of what is the bigger picture, but what is the shorter term picture within the 4-hour window, okay? So for example, if the price action here started to become bullish and started to head up, that would make sense to you because you see the bigger, you can see the 4-hour picture here. So the 4-hour window is your magic, that is your clue to what is going on for the day. Okay, so I wish I could talk for hours. I wish that I could do these webinars 2 hours at a time and I could talk to you about stuff. So I could start to talk to you about an approach as a day trader, but unfortunately I just can't. So I wish I could, but I can't. So ladies and gentlemen, I need to kind of wrap up here, but what I wanted to say to you is Aussie dollar is relatively weak. The euro and the pound are relatively speaking are relatively strong. Some of the yen pairs are a bit all over the place, but for example, I would say to you, look at all the GBP pairs. If they're all bearish, then look, then the pound is weak. So if the euro pairs are all trending higher, then they're all bullish. But if you find, for example, dollar yen is going up and all the other yen pairs are heading lower, please understand that the one exception to all the currency pairs is the dollar yen. Dollar yen will do what the dollar yen will do. And I think that that's because the Bank of Japan has a policy. They just make sure that the US dollar is happy. Whatever they do, they make sure that's the case. But they don't really care about euro yen, pound yen, Aussie yen. So you might find Aussie yen, pound yen, Kiwi yen all heading down and dollar yen is going up. And that's fine because that's the relationship they have. with regards to the other stuff, euro or pound, whatever is weaker. So for the moment, it does appear as that we have a weaker dollar, stronger euro, dollar pound. And it's really important that for the next 24 hours, 48 hours, that's what we're looking at. But also I want you to understand that within the week, generally speaking, over the last year, we've had a stronger dollar. What it appears to be the case now, and it could be temporary, could be permanent, it could be a change, is we appear to be getting a weaker dollar. So again, I wish I could sort of brain dump all the stuff that I want to tell you down, but I can't, unfortunately. But we've got other webinars later in the week. So I would really encourage you, if you want to pick up the ability to read price action, market analysis, regardless of whatever your strategy is to attend the webinars and bring questions. Please just bring the questions. Anything you have. Just say, look, I was looking at Bitcoin. I think it's bullish. What do you think? Okay, I always need your time frame and the instrument. Ladies and gentlemen, I'm going to let you go. Thank you, Sammy. I appreciate that. Marzina, always. Perhaps next time, please talk about the size of the candles and how they inform you. Absolutely. Bigger candles automatically imply bigger volume. Smaller candles are actually where the secret lies. Smaller candles imply a potential change in direction. Regardless of whether the volume is big or small. Volume can be small and we can have a change in direction. The volume can be big. Smaller candles are very interesting. So thank you. Ladies and gents, if you have any questions with regards to your account or the platform, please don't hesitate to contact any of these folks. This, obviously IC Markets. I'm at Trade with Precision. I'm not with IC Markets. But I really, really enjoyed my session tonight. Thank you so much, Marzina. That's very kind of you to say. So thank you. The recording is available. If you want, send me an email to this address, and I will send you the link tomorrow. Okay. And any other questions you have, just send them through. All right, ladies and gentlemen, I'm going to let you go. Thank you very much. I'm going to end the webinar, but I want to say thank you so much for your time. Thank you very much. I appreciate it. Enjoy them just as much as you do.